Choppy and a very choppy Thursday for Indian markets. When we started the day, it appeared that today could be the day of respite, but unfortunately profit booking kicked in and markets reversed and reversed quite sharply from the day's high.
Well, they certainly did. So we'll be assessing all of the market momentum and find out what exactly how one should do to approach the equity markets. Our three equity guests joining in: Sunil Singhania, CIO Equity Investment at Reliance Mutual Fund; Sandeep Wagle, founder and CEO at PowerMyWealth.com; and Nipun Mehta, founder and CEO at Blue Ocean Capital Advisors.
A look at the final tally. Like I mentioned, a volatile and a choppy day of trade for Indian markets. Nifty started with some degree of early morning advantage. Bulls were able to capitalize on that early morning advantage, but that early morning advantage even did not last for more than 2 hours. We slipped from the day's high. There was mild recovery in IT stocks, and it was a mixed day for some consumer and bank names. Small cap PSU banks, they continue to remain under pressure, and that's a problem area. With each passing day, more and more groups are now really on the receiving end. Top Nifty gainers: BHEL, Tata Motors and Cipla, and some of the prominent Nifty losers were BPCL, ITC and Hero MotoCorp. So BPCL, which has been a performing stock, now seems to be coming under pressure. Cipla, well, Teva is insisting that they've bid for Cipla. The management of Cipla seems to be denying that. And even though the data from China was strong, there was no big, huge impact of that impressive Chinese data on any of the key metal stocks.
Yeah, you said it. We didn't even last on to those gains come noon, and you did see the selling pressure only intensify to lead off to a flat close at 66.59. Broader markets, you have been seeing a little bit of resilience over the past 2 days. Not quite the case today. You had them underperforming once again, and you had the mid-cap index, which pretty much mirrored the way the frontline index performed. It was a weak advanced decline ratio, and we got off to a good start, but then shaved off something like 40 points from the day's high to end rather quiet for the mid as well as the small cap indices. Some result reactions will focus in on Union Bank. A disappointing set of numbers. The asset quality stress was persistent. Profits did come in above estimates, supported by the tax write-back of 180 crores. Margins rose slightly by 5 basis points sequentially, but the asset quality stress is really what led the stock lower. Slippages and addition to restructured assets also remained high. Finolex Cables, it was quite the contrary. A great set of numbers where you had the bottom line growth, which was higher by a good 74% this time around at 69.3 crores. The net sales too came in rather flat this time around, but the stock was very active. Cox & Kings got a contract to handle visa and passport services from the Indian Embassy in the United States. That's for its subsidiary. The counter was clearly upbeat on the back of that news. P&G put out its numbers yesterday, and the net sales were at 500 crores, up a good 20%. Profits shot up a good 55%, and it was a big thumbs up. Gujarat Pipavav, well, you had Citi, which maintained a buy rating, raising the target to 104, saying that the strong business momentum, the pricing power, and strong cash flows will bode well for the company. But all in all, Nikunj, apart from the fact that we're not even able to sustain those gains, it's a little disconcerting to see the FIs being net sellers for 3 straight days in the derivatives segment.
Well, Aman, it's been a bad week, and today was another choppy and sloppy day for Indian markets. The problem for Indian markets is that with each passing day, the broad-based selling actually is intensifying and volumes are taking a huge hit. Today, we saw big selling in a popular theme like agri. Yesterday, mid-cap PSU banks really took it on the chin. So the price action clearly is smacking off some profit booking. Large players are cashing out. Money managers are raising some cash, and HNI investors are locking some gains. The problem with this market is that there is no one is interested in buying into stocks. Foreigners have stopped buying into the cash market. They're selling in the F&O market. HNI investors are simply waiting and watching. So I guess we are in that stage of the market where markets are slightly confusing. The action will remain choppy, and traders and HNI investors are better off really being on the sidelines, because in this kind of a market, it's going to be very difficult to make money. At best, you should prepare your portfolio for a thrusting move on 13th of May when markets will react to the exit polls. But it's anyone's guess what will happen.
Okay, and we clearly have been seeing that momentum of consolidation over the past many days. And is 13th going to be the deciding factor for the direction that the markets will take? Let's find out. And Nipun, that's exactly the question I'm going to pose to you. Do you think that this kind of a pullback is rather inevitable, and that the next trigger is going to be the reaction of the markets to the exit polls?
Sure. I think you've seen lackluster market movement, very limited institutional participation. The market has already run up in anticipation of whatever the results, the election results might throw out on 16th. So I think clearly whatever results that we are seeing, the market really clearly not reacting to it except for individual stock price movements. But a fair amount of mid caps facing some amount of profit booking, whichever run up in the short term. So clearly I think the exit polls on the evening of 12th would likely be one of the triggers. Not necessarily show direction to the market, because we've seen exit polls in the last two elections not necessarily being absolutely spot on. So yes, probably that could be 13th could be a day when there will be a fair amount of volatility based on whatever exit polls that might be there. And an indication of what we could be in for over the weekend when the actual results are announced. So yes, a fair amount of volatility expected after the first trading session next week.
Sandeep, a bad week, and today was another choppy and sloppy day. If I just map the market internals, the problem for this market is that not only Nifty is exhibiting a slightly confusing pattern, the selling in the broader market only has intensified.
Well, Nikunj, I would partly agree with you. I really don't think that we are in a sell-off mode and we will crash down one way or something like that. We may come down depending on the result. But I think over the last 3 weeks, at least the last 2 weeks, we are seeing people getting out and not wanting to play the event. I mean, I would look at it that way. And sideways to a corrective market phase is what I would talk of. And lack of interest before this big event, where people don't want to take that call of, wait for things to cool off and then take a position. I think this is what it is. We have had a very smart move from 5900 to 6900 over the last few months, and now this is a small correction that is ensuing, so nothing wrong with it.
Sunil, let's get across to you. And a week ahead of the poll results, apart from the election outcome, nothing else seems to matter. So what NDA number do you think is in the price?
See, I think one good thing is that, obviously we are heading for a very, very major sort of an event as far as markets are concerned. But even if you, leave it aside, I think both on the macroeconomic front as well as the global scenario, things are much better. And even if you see the earnings season, which so far has panned out, I think the earnings are coming out much better than what people are expecting. Of the companies which have reported so far, almost 16% profit growth has been reported, which is higher than what the analyst expected. On the election front, yes, there is an expectation that there would be hopefully a strong verdict, irrespective of the party which comes in. And I think we'll also go by that optimism. So I think from both macroeconomic, fundamental as well as a news flow perspective, things are looking quite, optimistic.
Okay. Sunil, you hang in there, but Sandeep Agle, today's price action in PSU banks was slightly non-inspirational, especially the kind of price action we've seen in Syndicate Bank, Allahabad Bank. What's going on with the mid-tier PSU banking space?
Well, Nikunj, this was a little unnerving. Probably the expectations were not met. But I would still say the banking space is a mixed pack. I mean, a Kotak Bank, a State Bank, some of the other, an Axis Bank, they were not showing that kind of weakness. So I won't call this a weakness across the banking space. Yes, a Union Bank, Syndicate Bank, a couple of other banks, probably even a Can Bank can see some weakness. So I think it was more stock specific. Possibly expectations not having met in terms of results, and then a sell-off. So I would term this as a deeper correction than other stocks, but I will still not talk of it as a sell-off in the whole banking space.
And if you look at the IT space, that continued to remain under pressure. What is it, Nipun, that you would make of this? Do you think that the heydays that we saw for Infosys are now coming to an end given all of the management rejigs? Because the management also has been fairly conscious when it comes to the cost-cutting initiatives, which is why they were able to maintain their margins this time. Okay, Nipun, we'll just come to you in a bit. Sunil, would like to, take a look at some of the performance of, the fund that you've got. And finally, there's good news. Close to 99% of the schemes, they're outperforming the benchmarks. Do you think that this is going to sustain?
See, thanks a lot for the wishes and thanks a lot for this analysis. From our perspective, we have always focused on the core philosophy of fund management, which is, believe in the best processes, believe in the best people, and then performance will automatically flow. Obviously, last 3-4 years have been slightly different in the sense that, stocks which were considered safe rather than where money could be made have done well. And obviously, when you're taking a call, and our call is obviously of India growing, you have to play the whole cycle. So I think we have stick to our conviction, we have stick to our core philosophy of a diversified portfolio. And we have also stick to our core philosophy that, in this huge nation and a wonderful nation where entrepreneurship is of the utmost sort of importance and where new sectors continuously keep on coming up, we have to focus on a wide variety of stocks and a broader market. And I think that focus across our schemes has started to pay off. And we do believe that, we have in us, as I said, processes, people, and performance will automatically come. In being one of the mutual funds or the asset management companies, which will last for a long, long time. And I think, thanks to well-wishers like you and our investors who have had confidence in us, we are very happy to see this kind of turnaround.
And we're highlighting some of the important factors that you'll be needing to watch out for tomorrow. Start off with some key earnings. We'll be focusing on Eicher Motors, NIIT Tech. Ranbaxy will be the big one that will be putting out its numbers from the pharma basket. Not just that, the primary markets will be seeing some activity finally. Wonderla will be listing tomorrow. Apart from that, we've been talking about how disconcerting it's been the fact that the FII activity hasn't been encouraging. They have remained net sellers in the derivatives segment for the last 3 straight days. And of course, what about the action in the mid-cap PSU banks? That'll be something that'll certainly be monitored. And apart from earnings, what is it that you'd be watching for?
The first bright shot would be Wonderla. I mean, you got a big listing, massive oversubscription. So retail investors who have got some allocation of that IPO, they should feel happy because tomorrow there surely will be a listing pop. But that listing will not be the market moving event. What, however, I would like to monitor are some of the key mid-cap groups which have been performers, like PSU banks, oil marketing stocks, PSU stocks in general, especially industrial PSU names. Because if indeed markets are in some kind of an corrective phase, some of those ranked outperforming sectors and groups, they would correct. We've seen traces of that already yesterday in PSU banks. We saw traces of that already in some of the agri-related stocks. So my sense is that what has moved now is under threat, because if markets are in a mood to book profits, whatever has gone up, maybe the law of gravity will now catch up.
Okay, so that is what Nikunj will be watching out for. But let's focus in on the big earnings and particularly Ranbaxy. That's the Nifty 50 company that will be coming out with its numbers. It's going to be Q5 because the company has changed the accounting year. And we're expecting this time around that the revenues will be higher by just about 12%. The adjusted profits post the Forex and MTM is likely to come in higher by 6% at 120 crore rupees. Watch out for margin expansion. So close to 8% is what we're expecting. And we can expect strong growth when it comes to the US markets as well. The Eastern EU CIS is also likely to see strong growth. A day ahead of its numbers, 469 is where Ranbaxy has shut shop. Nipun, what is it that you're expecting from this one? And in the pharma space also, would you be venturing into any of the names?
Sure, I think pharma is one space which has continued to outperform. You've seen fairly decent growth, both top line and continuation of sustained margins coming about virtually for all the companies, both that sized as well as mid-sized. There have been probably 1 or 2 results which have been a bit lackluster, but overall as a space you've seen a fair amount of growth as well as margin sustenance. Even as far as Ranbaxy is, of course, Ranbaxy could be interesting given that the company has seen quite a bit of US FDA problems. Some of them seem to be out of the way over the last few weeks or so, but also whether there is any announcement that could come about or further details in terms of the acquisition, if at all, that could be made soon. Now, I mean, along with the results of probably a little later, based on how the acquisition is actually likely to go about, is likely to pan out. So I think Ranbaxy's results would be interesting to watch, but overall I think as a pharma as a space is something that will continue to attract investor attention. Given that this is one space which
Nipun,
has...
I'm having a problem with your audio. So Sunil, let me throw this question at you. And Sunil, the scheme which you manage and oversee is Reliance Growth Fund. Now it has a strong tilt, or Reliance Growth Fund has a strong tilt of mid and small cap stocks. So what will be your positioning in the mid cap group, and will your bias towards the mid cap group continue?
The valuation gap in mid caps, small caps vis-a-vis the large cap has definitely widened over the last 4-5 years. So while Nifty has crossed its highs of 2008 and now it's almost 7-8% higher than those levels, both on the mid cap and small cap, even the indices are like 20 to 30% lower than what we saw in 2008. If you actually take stock specifics, we have done a study of some 800 stocks, which till 15 days back, almost 45% of the stocks were trading below book value. And almost 50% of the stocks were trading below a PE of less than 10 times. And I think what happens typically, Nikunj, is on the mid cap and the small caps, if you start to have earnings growth, you suddenly reach a size where markets will start to also give a higher multiple. So instead of 5, 6, you start to get 7, 8, and then 8, 10, and then 10, 12. And that is where you start to make alpha, because both the profit growth as well as the perception improvement definitely helps. The other thing is that if you're banking on a turnaround in the economy, and you're also banking on the fact that India is probably one of the very few countries where interest rate cycle has to start to come off, the interest rates have to fall over a period of time. Both these factors tend to impact positively the smaller companies more. And I think again the probability of a faster profit growth in this segment is definitely high. So while focusing also on some of the larger companies which are trading at decent valuations, we definitely believe that mid caps will offer probably larger number of companies which a long-term investor can bet on, and definitely we believe that alpha can be created by doing so.
Sandeep, PSU banking stocks was clearly the weak link today. Union Bank for all obvious reasons, Andhra Bank, Allahabad Bank. Is it a consensus sell or just a flash in the pan? Because we have been seeing this trend build up for the past few days.
Aman, the stocks that you talked of are certainly weak, and I see some more downside. Now, State Bank is not in that category, Kotak Bank is not in that category, and Axis Bank is not in that category. So I would be stock specific. But I think the smaller rung PSU banks are looking weak. I think Can Bank will follow suit. So in that sense, I would be look out for selling opportunities in some of these banks on every bit of an up move that comes in.
We're highlighting some of the top recommendations that the dealing rooms as well as our fundamental and technical experts have. First up, let's get a view as to what the dealing rooms are chatting about. Gargi's here with the latest. Gargi.
Well, Avan, firstly, look at the Gujarat Pipavav, a good move that we've seen in the last 2 trading sessions. In fact, today there was a buy call coming in from Citi. They've raised their target price to 104 from the earlier 77 levels. Remember, the earnings have beaten the street estimates. Also cannot ignore the fact that Gujarat-based companies have been rallying in the last 1 month. Dealers are expecting the rally to continue for the counter, and we could see 4 to 5% additional gains coming in for this counter in the next couple of trading sessions. 2.8% up move that we've already seen on the counter today. Look at Syntex. That's the other one. Stellar performance. If you look at the March quarter, the EBITDA margins are 18% versus 13.5%. Though dealers and most of the institutional desks were expecting a margin expansion, but this one has clearly beaten the street estimates. And if you look at the sales number, 41% uptick there. Heavy in HNI buying. That's what dealers are indicating.
Right, Gargi, thanks a lot for that. Sandeep Bagle, give me your top trading ideas for tomorrow.
Nikunj, stock specific move is what I expect. A buy in Arvind. The move has started today. It will continue tomorrow is what I feel. Stop loss of 191, target of 206. The second call is a buy in a SAD Aluminium, stop loss of 538, target of 695.
Nipun, your top bets?
Well, as I've said earlier, I think you're in for a week of huge amount of market volatility. Investors could get on the at wrong prices. Really, it's time to be on the sidelines. It's time to clean up some part of the portfolio where you've seen significant gains. Need to stick to some of the large cap companies. Need to stick to some of the fundamentally sound companies with a fair amount of cash, non-leveraged companies. So we're actually ensuring that this kind of market volatility can be probably taken benefit of if there is institutional sell-off that could be there. In either case, I think, but post the results getting announced, there will be a fair amount of clarity on whether cyclicals could be outperforming. And our sense is probably if that does happen, if there is a stable government, cyclicals is something that could outperform, and that's where we are taking a look at more closely on some of the options that are available.
Sunil, final question. The script of how Indian markets have moved in last 2-3 years broadly has been a function of global liquidity and central bank policy action. What could influence the script now? Earnings, stable government, or come back by the retail investor?
This market has become very dynamic. Every 1 or 2 months you change your views. And there is probably sort of a consensus kind of a decision towards that. Yes, in case we have a very one-sided verdict in the elections, and there's a possibility of rupee appreciating in the very near term. But I think if you actually see, the last couple of months' data, specifically on the export side and the import side, a strong rupee is detrimental to the country in the immediate term. You have to focus on manufacturing, and a sustained strong rupee is not something which we can sort of afford as a country immediately. And the RBI governor has also been quite vocal in the sense that they would like to maintain rupee at a fair value, which according to them is the current value. So while admitting that in the near term there might be a sort of an underperformance largely because of rupee, as also because people would want to go into the high beta domestic cyclicals. But at the same time, if you see the growth in volume which IT companies are expected to report in the next couple of years, as also the fact that valuations are now in your favor with 13-14 PE multiples, we would not cut our at least a neutral view on IT. We are slightly overweight IT, and we'll continue to maintain that.
Okay, gentlemen, we'll leave it at that. Thanks so much for taking time out and joining in with your expert opinion on the markets.